When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida. He's nice enough to come on and talk about what's happening in the marketplace. Shawn is back from a whirlwind speaking tour. So, Shawn, how you doing, buddy?
That was good. It's been 2 weeks of heavy-duty traveling in the Midwest. And then I came back to chilly South Florida here, 50 degrees today, which for us is a little nippy for us. But
might as well be Antarctica, right? Yeah.
5 degrees in Indiana and 35 degrees with drizzle and heavy winds. I'm feeling fine right now compared to where I was. I'm feeling really, really good. So I'm not feeling it as much as I would have felt it had I not traveled to the Midwest. Although looking at the calendar, I'll be traveling to the Midwest mid-late February into March extensively, and I don't like the forecast that I see. I think another round of ugly cold and snow is coming, and I hope I can dodge those bullets when I'm on the road again. So far I have, but, no guarantees with that.
All you got to be is like every other weatherman, Shawn. Just change your forecast right beforehand, and it always works out.
I wish I had that power to just change it whenever I want it. Unfortunately, God is in control, and it gives me a text every once in a while, but not enough.
Yeah, that's the hard part. You never know what you're actually going to get out of those deals. So
yeah.
Well, let's talk a little bit about that, Shawn. So you put out your last report. It came out, and if you guys aren't signed up for Shawn's service, it's well worth your while to do that because the amount of information that you get from that is quite spectacular. So check that out if you have a chance. We'll talk a little bit about how you can sign up for that here at the end of the podcast. But Shawn, let's talk a little bit about the record short positions that we see in the grain market right now. There's a lot of things going on out there that you think would have turned the tide a little bit to where some short coverings would start taking place, but we're not seeing that at all. There's still very much in a holding pattern when you look at that. We got the tensions that are escalating in the Middle East with what the drone strikes and stuff that we saw happen over the weekend where a couple service members were killed and several injured. That's just one more tally back on that, but this is the biggest extent that we've seen in there. So there's some real tensions in the Middle East right now, greater than what we've seen in the past. We've got this polar vortex starting to kind of stir up and cook up. If you look at where things were at in December during this record hot time that we saw in December, and then how that ended up in January, the same pattern starting to repeat again, similar to what you saw coming down. So talk a little about the short covering positions that you see out there and what some potential that you could see coming up that could stir that up to where you could start seeing some pretty big movements in the market here.
Well, first of all, why have they done it? Why have they gone record short as a percentage of an interest in grains of all time? Why? They've been feeding off the narrative that China is imploding economically. The stock market's been crashing. So our exports to them have been poor because they've been buying everything from Brazil, even though they've had very, very strong corn and soybean imports for the year in 23. They did not buy as much from us. So our balance sheets don't look as exciting as many thought they would be. And so they've been keying off of that. And that's just, and then the way these funds work, the computers work, the algorithms work, like the trend is your friend, and they press the trend until the trend stops going. And so far, they've been pressing the trend, and the trend keeps working its way down, and they could stay that way for a while. There's nothing that says they can't stay that way. There's nothing to say they can't get a little more record short. I mean, but what I'm saying is that historically, when you get the one-sided trade, the crowded trade like this, the market is extremely vulnerable to the whipsaw. If a catalyst strong enough comes in that makes them feel that they're on the wrong side of the market, that the narrative I just painted to you is no longer convincing enough against what a new piece of information, that it feels like that they feel like they're on the wrong side of the trade and they need to buy back those short positions. There's a lot of things that could do it. It could be that something we don't even know yet, Casey, that could do it, right? I mean,
right.
We know what we can see. We don't know what we can't see. And maybe it's going to be something we have no ideas coming that's going to get them out. What I always try to do is propose, what could be some catalysts that might do it. Right now, there's two that I see right now. Right now, Brazil's is in the heart of their soybean harvest, 12% harvested, something like that. We know anytime that a large exporter of anything gets into harvest, what do we hear? Harvest pressure. Not every farmer in Brazil sold when they were supposed to. Not every farmer has storage. They got to sell off the combine. So we are dealing with the harvest pressure season in Brazil. The cash price in soybeans in Brazil has widened relative to futures as they're dumping soybeans because there's that harvest pressure. We see this all the time. So that is pressuring the market as it typically does. Now, what happens obviously is once you get to that 25 or 30% harvested mark, most of the low-lying fruit that has to sell sells. And then you get your post-harvest rally. I mean, this is not rocket science. I mean, Casey, we've been talking about harvest pressure, post-harvest rallies for as long as agriculture has been alive. This is a general trend, not every year, but most years. So we're in the midst of the harvest pressure. We probably have another couple of weeks where soybeans are going to be impacted by harvest pressure and widening basis in Brazil. And then that crop gets put away. And then what we're going to start to hear is the crop down is going to get smaller and smaller. And I think that ending of harvest pressure and the full understanding of the smaller crop, that could be a catalyst later on in February. Okay. In 2015-16, the last time we had a weather scenario in Brazil like this, where they had a drought in the north and a wetness in the south, and the soybean market took off the last week of February, and I think it shot up 40% over the next 4 to 6 weeks. No 2 years exactly the same. I'm just saying that a post-harvest rally is one catalyst. The second catalyst is kind of a shocking weather event. And we proposed the idea that, so we had this blowtorch in mid-December. We were projecting a big change in late December, leading into a very, very cold, snowy first 3 weeks of January. And in fact, it was the coldest, and in many cases, the snowiest in 100 years in many areas, and surprised everybody. Natural gas prices on the front contract went up almost 50%. And so we had that. Now, of course, the winter wheat had largely had snowfall. There was some issues, but it wasn't an event for winter wheat. However, this blowtorch that we're getting again, because what happens is when you get a sudden stratospheric warming event, like we had in mid-December, it does tend to create a short-term blowtorch period of hot weather. And we're now in a sudden stratospheric warming event again. There tends to be a 30-day window from when the SSW event starts to when the polar vortex kicks in. So if we look at mid-December, when it started, actually started the second week of December, we could have projected that we would likely see a polar vortex by the early part of January, which we did. So now we've had this SSW event started in mid-January. So we can realistically expect that we would see some kind of a polar vortex event by mid-February, give or take. And this correlation holds very, very true when you have a negative QBO or quasi-biennial oscillation. These are very rapid stratospheric winds that oscillate back and forth on a 27 to 32 month cycle, back and forth. Right now they're going from east to west, going against the jet stream, which causes tremendous jet stream and polar vortex destabilization in that environment. In the negative QBO, it's a high correlation that when you get an SSW event, that 30 days later you're going to get some type of a polar vortex event. It's not 100% perfect, but it's highly correlated. A few other things that we were seeing in mid-December that gave us a heads up. Global angular momentum is something we talked about in your show before, which if it's positive, the atmosphere is moving faster than the Earth. If it's negative, it means slower than the Earth. When you get an SSW event, remember, this is blowing out the atmosphere. It's just blowing it out, okay? So when you get an SSW event, you get the atmosphere running faster. So we've had this big surge in the global angular momentum to positive territory. We had the same thing occur in December. And when the SSW backs off, then the global angular momentum caves in. And that is kind of, and once you see that, that is telling you, get ready for it. And we're starting to see that. Another thing is the Southern Oscillation Index, which is the pressure differential from the West Pacific to the East Pacific. When you get a SSW event, you get this explosion in positive Southern Oscillation Index. Positive Southern Oscillation Index is a La Nina response, actually. And so when you get that, blowtorch. And then when the SOI starts to cave in, and it's been completely crashing, and now we're in negative, I think we're at negative 17 now from positive 30, where we were a week and a half ago. So it's just crashing. When that crashes, and the same thing happened in late December, a crashing SOI says SSW about to weaken, and from that time that we start to crash, you can look out 2 weeks. That's a 2-week correlation. It says you can expect a sun stress warming within 2 weeks' time, which gets you to mid-February. Both of these correlations are highly correlated with a negative QBO. So then I'm not a big fan of the models, as you know, Casey. I trash them a lot, but every model has some piece of information. Some models are good at temperature, some models are good at moisture, some models are good at stratospheric conditions. A few models are good at picking up polar vortex events in advance. Not many, but there's a few that we've found over the many years that we've been doing this that aren't too bad at picking up well in advance a polar vortex event. One of those models is the Euro control model. It's a specific model in the Euro that's very, very good at picking up. It absolutely nailed polar vortex event coming in January that confirmed. We don't use the models to decide what to think, but we like to see when another model is confirming what we're doing, because it just gives us more confidence. And that model is showing very much a kind of polar vortex-ish kind of event around mid-February, the week of February 15th to February 22. So that gives us increased confidence that we're on the right track with this. So here's the setup, Casey. Our calculation is that about 50% to 2/3 of winter wheat, SRW, HRW, because it's going to be so warm here for the next 10 days, is going to come out to some extent, it's going to come out of dormancy very, very, much earlier than it normally would do. So when you come out of dormancy, you're no longer hardened like you are when you're in dormancy, meaning when you're in dormancy, because it's been cold, you're hardened, the wheat's hardened and it can handle cold. You need to be a certain temperature to really do something. As there's snow, but now it's going to 2/3 of it to 50% of it's going to be out of dormancy to some extent, meaning it's going to be much more vulnerable. And of course, it's not going to be snow cover. So and a lot of times what happens is this cold air comes rushing in, and then the snow comes in behind it. Not every time, but a lot of times, if we were to get another one of these extreme events like we just saw, which I think is very possible here, and we get this initial surge in without snowfall, we get a cold before the snow with, let's say, 50% or more of this winter wheat somewhat out of dormancy, the damage would be considerably larger than one would ever expect under a normal winter kill situation if the crop was still in dormancy. That could be, I wasn't expecting this kind of an opportunity until May, as you know. I did not expect that we were going to get this warm. I thought we talked about a warm up. It's just it's deciding to get a lot warmer than I thought, and it's providing this potential opportunity. If that happens, Casey, and we get a serious weather event that severely damages and debilitates the winter wheat crop, and we get a short covering rally in wheat, the same people who are short wheat are short corn or short soybeans. It's the same money. It could trigger a short covering rally in the grain markets for a little while. Like it could be one of the cows to get a bunch of these funds that say, shoot, we didn't expect this. And so that's something to look for. Not today, not tomorrow, but as we approach mid-February, that could be a catalyst to provide, a big surprising short covering rally that would offer an ability, instead of farmers selling into the hole, which is many are panicking doing right now, selling into strength. And we're a big believer. You always want to try to sell into strength. Look at the cattle market, right? A few weeks back, market was getting crushed, and we were sort of suggesting, we could be due for some kind of a bounce, and we've gotten this 50%, retracement of the prior decline. Now, if you're a livestock producer in cattle, now is your opportunity to sell into strength. Now, it's not as good as it was in the fall, but it's an opportunity now to sell into strength instead of selling into a hole, which is what everyone was advocating a few weeks back. So is it what I just said? Does it mean it has to happen? Maybe we get the snowfall ahead of it as now, but we have to keep looking for these catalysts, Casey, because one of them is going to trip up the market. It's going to be fast. It's going to be coming out of nowhere, and you need to be prepared as a producer to act so that you get yourselves, if you're not in the position you want to be in with your cash sales and you need to catch up, please sell into strength. Don't sell, into the lows after a 2-year bear market. That's just typically not how you bring more money home on the farm. So
no, that's usually not a good recipe.
And that's where we're at right now. Everybody, and what I said in yesterday's report, I said, look, if you're losing sleep and the doctor says your blood pressure is at 200, you're not going to make it unless you relieve your stress, and because you're listening to all this Armageddon, $3 corn, 3 billion bushel carryout stuff. Look, you can always put some floors under the market and remove that risk from the marketplace. You can always do that. There's always an option to do that. Put a 440 floor or 1150 floor, under your crop. So if the worst case scenario happens and that's where we go. We don't get any rallies all year long. At least the worst case scenario is not going to happen to you. If you're in that position, then protect your inventory that way. I don't know what else to say. It's just there's ways to alleviate if you're uncomfortable. It's not for me to decide if you're uncomfortable or not. But if you're not comfortable, then get yourself comfortable. But it's how many years do we go through we don't get something to rally the market in an entire calendar year in grains? I'm sure there's a year out there where we didn't, but we almost always at least get at least one reason for at least a little while where the market gets a little excited and they worry a little bit that maybe their bearishness is not warranted, and we get some kind of a rally. Even in the most bearish times in 2012 to 2020, when we had 3.5 billion bushel carryouts, we had those rallies. So to me, the probabilities say that we're going to get opportunities as bleak as it looks right now, and as impossible as it seems like we'd ever get a rally. History says that probabilistically, we're going to get one or two opportunities to sell some optimism. And that's So and with the funds in this extremely crowded trades, at some point they will buy those short positions back. We know they always will eventually do that. Obviously the question is when, for what reason, and I'm proposing some ideas, and we just need to look out for that and be ready to take advantage of the market whenever it decides to get more optimistic. Just look at hogs and cattle here in the last 2-3 weeks have big rallies after extreme bearishness out of nowhere. The milk market, big rally all of a sudden, extreme bearishness. Markets just rally all of a sudden. Sometimes they just rally just because the buyers just decide that it's time to buy, and they overrun the market. I don't know what else to say other than I just think that that's what we're on the lookout for. And post-harvest rally potential for Brazil, and maybe the timing of this polar vortex could create a weather shock for winter wheat that could create a catalyst to get these shorts out. Maybe not. Maybe it'll be something else. As I said, oftentimes it's something we don't even know is coming. And you wake up one morning and corn's up 20 or 30, and you go, what just happened? I remember, and all of a sudden you find out something happened, and that's your catalyst that you had no idea was coming. I mean, I don't know. We don't know everything. So.
Yep. No, I think those are so much. There's so much laying out there right now, Shawn, that you could honestly throw a rock and hit something that could massively swing the market right now without really even trying. One more thing I want to throw up out there for everyone to keep in the back of their mind. So if you take a look at what's going on in the Indian wheat crop, I think there's stuff that worth talking about there. Similar scenario to what happened a year or two ago. We had a fairly cool period that was good for dormancy. Then we had this huge warming event come. They're coming through another warming event, as you talk about right now. And Shawn, as you look at your models, India could have some of this big frost polar vortex issue come their way as well. As we head into this warm phase, as their wheat starts to come out of dormancy, maybe a little bit early. Talk a little bit about that and what you see happening there.
Well, I mean, I don't think it is as much a frost issue as much as it's just being too hot and dry at the wrong time.
Okay.
Their yield is formed really, in the next few months, and obviously, like anything what you want to avoid is extremely hot temperatures, is extremely deleterious to yields for winter wheat. Their climate's a little different than ours and Europe's, where they can get super hot much sooner than we can, and so that really jumped trumped the crop a few years back, and there's this looks like right now there could be, remember, this Tonga effect is still at large. It's still out there, and even in Argentina they're getting some historic record heat, and these heating events just pop out of nowhere. This Tonga event just keeps providing this ammunition for these extreme hot weather events out of nowhere, to create havoc if it occurs at the wrong time for yield development. And it looks like India may find themselves in a situation where the Tonga effect is going to pay a visit to them at exactly the wrong time, when it's most important for their yield determination for their wheat crop. And obviously India is extremely important for wheat because historically they've been a large exporter. They now have they've been halting exports, and and obviously they in some years they've become a large importer at times. So they're a big balancing act country for wheat. And certainly if wheat in India were to become compromised, then they would be dealing with a greater shortage of wheat and having to import more wheat at a time that rice is extremely tight. These are your go-to commodities for feeding the world. Half the world lives off of wheat and rice, and if you mess that up, you just have a higher order problem on your hands. And so it's definitely a boilerplate issue to monitor over the next 30 to 60 days to see how long this heat will stay there, and if it can really do the kind of damage it did a few years back that did set the wheat market upside down. So
yeah, that's a rapidly developing thing, and with the issues they're having with supply anyway, just like you talked about, there's a lot of implications there that could really change the way the world supply looks. So
well, just remember, they halted sugar exports, they've halted rice exports, they've halted wheat exports, they've de facto halted cotton exports. They got this election. Modi's going to get in, I guess. But I think they are waiting for August, where they can say, "Hey, we're gonna have a good crop." Not for wheat. Wheat already know. I'm talking about for rice.
Right.
Are we gonna have a good? But if the wheat crop is short, because the wheat crop's determined before the summer, boy, it's going to put they're going to be much more unlikely to remove their rice export ban, especially if we have any adverse weather in the first half of the growing season. If El Nino hangs on, which it probably will, then they could have some unfavorable weather, and a short wheat supplies makes them not want to give up the rice supply, because they can feed themselves one way or the other, and if wheat's not there, boy, they're gonna. I just can't imagine they're gonna want to give up a lot of their rice to others. I think they're going to want to keep it for themselves. So it's a dance that both those crops play, and it's really important that they have a bountiful wheat crop to take the pressure off, and that's what makes, like you said, this next 30, 60 days very important for India and how that plays out. Because if the wheat crop comes up really short, it's really highly unlikely we're going to see any alleviation of the rice export ban, and Asian rice prices keep flirting with some historically high levels. Even the U.S. rice price is pushing 18, for the first time in a while. Things are tight in these key humanitarian food commodities. So,
for sure. All right, we've talked about natural gas for, I don't know, last 3 or 4 podcasts on here, and it wasn't until I watched your video you put out yesterday where I really got a good understanding of what's happening. So let's kind of bring everybody up to speed here. So if you're looking at what happened in the summer, relatively cool summer, as on, relatively speaking, we had a huge buildup of natural gas. We go into December, again, really warm phase in December, where what the drawdown for natural gas you typically see that time of the year just wasn't there. Saw this huge cold come through, this huge polar vortex come through, and in like a 3-week period, the amount of natural gas that was available in stores to where it's at now just dramatically dropped down to basically 5-year averages. Now, as we head back into this next round and we see what happens there, you're going to see a similar drawdown to what we saw, which will put us way below from where we need to be at. And if you look
at the drawdown that we had in January, and we're gonna obviously we have this warm period, so we're gonna move a little away from the 5-year average. But then if we do a similar drawdown, which we think we will do, then we're gonna close the season below the 5-year average,
right?
Way below last year, and similar to what we were 2 years ago, going into what should be a very hot summer, hyperactive hurricane season in the Gulf, and an early start to the winter in 24-20, meaning that the winter is going to start early, meaning we're not going to have that warm blowtorch December to save the day. We're going to be drawing heavily, in that fourth quarter. That's a setup for a market that could, be trending, up throughout the year as a result of that. So that's that. So right now, I think the front contract in natural gas had rose over 50% off the lows during the last cold event, and we've come all the way down to retest the lows. The Freeport LNG facility yesterday mentioned that one of the 3 processing plants is going to be offline for 30 days because the cold weather was so severe and it damaged equipment that they need to replace. That's 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 it's adds a little extra bearish tone, because at least that one of the 3 can't export LNG for at least 30 days. So we had a knockdown yesterday on that news, which probably that's how you set your secondary low on an announcement like that. It's usually how it works. You get that, and then
right.
But bottom line is we're doing a full rate test of the lows, but if we, now the March contract is the front contract, there could be substantial upside to the market as we have another one of these big drawdowns, if we're correct about this assessment. And, and I just think that if you just look at what I just said about, natural gas is crazy. It's up and down, very volatile. But overall, I think once we're done with this secondary low here and we trade, and if we get this polar vortex, we trade below the 5-year average, I think we have a market that can trend up, generally speaking, trend up into the fourth quarter, maybe carrying over into the first quarter, where we might make some kind of high for a while. It's just something that looking out, that's potentially what we could be seeing here. And physical buyers of natural gas, propane, I know the bears have control of the narrative, and there's no reason why you should be even thinking about physically locking up your natural gas. But you're supposed to be locking in supplies and inputs when the getting is good. The only way the getting is good is when everybody thinks that you're an idiot for locking it in.
Right.
If that's the only way you get a good price.
Right.
So, I think this is a long-term physical opportunity for those that have the capital to do it, and for those that have the ability to go against the crowd. I think this is a very interesting long-term opportunity to lock in an incredibly economic advantage in natural gas derivative energy supplies.
You answered the question I was going to ask you, Shawn, without even asking the question. Look at that. All right.
What were you going to ask?
I was going to ask, what about long-term inputs with natural that associate with natural gas? What should you do?
Yeah. There you go.
So, there you go. That was kind of watching that video and seeing how the drawdown was happening. And if the drawdown, as we go into the end of the summer, and if it is a hot summer, a La Nina summer, like you're expecting it to be, the draw for electricity during the peak of these heating cycles are going to be massively as well.
And then if we take, if we get active Gulf and we take all these crews off the deep water drillers, yep. and you knock production down, it's another element, right? It's another element that keeps the rebuild cycle from gaining as much strength. And then if we start, if we get some really cold temperatures in the fourth quarter, October, November, December, let's say it's a colder fourth quarter. We don't get that ability to, we have a setup here that's pretty interesting to me. I think that, and when you look at actual production is starting to, the growth in production is really starting to fall off. These low prices are starting to have an impact. And we're really starting to see a leveling off of production. And so it's just going to be hard to rebuild those supplies to comfortable levels if we have this next polar vortex period from February into the first half of March. It's going to be really, really hard to get them back to levels that are going to be comfortable, especially if we get off to a cold start in the fourth quarter. It could definitely set off some warning bells. And so, my job is, and I think the job of anyone who's involved in agriculture, is looking at your long-term business, looking at the long term of where things might be heading. And everyone tries to look at today, tomorrow, next week, and it's bearish the next week, whatever. But long term, I sure think that this is, if you had told anybody when we were at 8 to 10, not too long ago, that you'd have another opportunity to lock in natural gas, propane, and derivative products, back, in the low to mid twos, similar to what we'd had during COVID. If I told you would have an opportunity to do that, I think everybody would have said, I will do it I will go buy 5 years out of, now we're here because everyone's bearish. I don't want to do it now. I don't want to do it now. But they would have mauled me to do it a year and a half ago when I hit the $10 natural gas. So psychology is an interesting thing with humans. It makes us do the wrong thing at the wrong time if we let it take over. And I always feel that a price forecaster of markets is more a psychologist than it is anything else. Obviously, you try to put out good information, but the most important thing is managing the psychology of your customer and trying to get him thinking differently than he wants to think. And look, I'm a human. I think this. We all get emotional, and but you have to try to train yourself to think opposite of what your emotions are telling you, because historically, most of the time, your emotions steer you down the road that leads to bringing less money home on the farm than more. And that's a tried and true principle that we have abided by ever since we started our firm in 2007, and we stick by that.
Yep. It is emotions can get you really don't make good decisions when you're making them emotionally. So.
And that's, and that's why things like, laying floors under the market can take away the emotion. If you've taken care of this Armageddon scenario, you don't have to worry. Now your mind is clear, like you can think clearly now, right?
Right.
Or like, when we have bullish markets, right? And you're afraid of, when we have $7 corn and everyone says it go to 10, and you're, well, if you've put in ability to participate in the upside, then you can make those sales with a clear mind, because you're doing things with managing your hedges in that manner. You can take that emotion off, and you can make the right decisions you need to make, knowing that should your fear happen, whether it's a blow off top to the upside or a blow off decline to the downside, you've taken those risks off, so you can think with a clear mind and do what's most likely going to be in your best interest. And to me, that's what managing the risk on the farm is all about, is getting yourself out of this emotional manic state so you can think clearly about what you need to be doing going forward. It's very, very hard to think clearly if you're waking up at 2 a.m. with the sweats because you're worried about $3 corn coming, and you're worried about how you're going to tell your banker that, I need a loan extension. You know what I'm saying?
Right. No, never fun conversations for sure.
No.
Just ask Alan Hoskins. He'll tell you that.
I'm sure he knows far better than I do.
Yeah. Right on. All right, Shawn, good stuff as usual. If folks want to reach out to you, get more information about what you're doing at Hackett Financial, or how to sign up for your newsletter, what's the best way to do that?
Our website is Hackett, HACKETT, advisors.com. We also have a Twitter page at Faradix11. We also have a LinkedIn page. We put on some interviews from time to time, like we just put on our market-to-market interview that we did last Friday. That's on our social media. Sometimes we'll put out little blurbs of things that we think are interesting to kind of get people focused on how we're looking at the world and agriculture, to see if how we do things with our cycles, statistics, and correlations is of value to those watching your show.
Right on. Shawn, love you having on you, man. Look forward to Thursday when we can do this again and talk about more stuff happening out there. So, Shawn, take care of yourself. Appreciate you being on the podcast, man.
You too, Casey. Talk to you soon.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to Snapchat, TikTok, and the YouTube channel, which is the Moving Iron Podcast YouTube channel, all at Moving Iron Podcast. And you can go to movingironllc.com for everything Moving Iron related. Moving Iron Summit's coming up here in Nashville, Tennessee, November 4th through the 6th. So check that out. Shawn's going to be there talking about what's going on. By then, we'll have a pretty good picture of what going into 25 will look like as far as crop conditions and those kind of things go, and where we're going to be at with those kind of things. So look forward to that. Need more information about that? Send me an email at movingironpodcast@movingironpodcast.com, and I'll make sure to get back to you ASAP. If you have any questions for Shawn, hit me up on all the social media sites that are out there, and I'll make sure to ask those questions when Shawn's back on. So with that, I'm Casey Seymour, Shawn Hackett. Let's move some iron, folks. Out.
Moving iron in the 21st century. Hard work.